Welcome to the deep dive. We sift through the noise, we get to the core, and hopefully give you the insights that really matter.
Glad to be here.
So today, we're diving into something pretty astonishing, actually.
Yeah.
Oracle Corporation, a name that's been around forever in enterprise tech.
Absolutely. Bedrock stuff.
Well, they just pulled off something. Wow. A market feat you just don't see from a company that big, that old.
Right. It really caught people's attention.
And it's not just, a stock bump. This feels historic.
Yeah.
And it seems largely driven by their role, maybe an unexpected role for some in AI infrastructure.
The AI angle is definitely key. And of course, the ripple effect on Larry Ellison's wealth is, well, it's a headline in itself.
Huge. So for this, we've looked at financial news, company reports, expert analysis, trying to get the full picture.
Tried to piece it all together.
And our mission today really is to unpack what just happened, why it's such a big deal, and what this sudden speed up means for tech, for AI,
Yeah.
the whole landscape.
Yeah, where does this leave things?
We're aiming for those aha moments, giving you the key takeaways. So let's get into it. Okay, let's unpack this event. Because the numbers, honestly, they're eye-popping.
They really are.
Wednesday, September 10th, 2025. Oracle stock. It didn't just edge up. It climbed 36%.
36%.
In one day.
In a single day. Now, maybe for a startup, okay, remarkable. But Oracle, founded 1977.
Yeah, a giant, a
And
legacy giant.
This was their best day since 1992. 1992.
It's almost hard to fathom that kind of move for a company with that history. Speaks volumes.
What kind of sustained growth, resilience? I mean, what an incredible pivot or maybe reveal for such an established player.
And the scale of that jump financially, it added, what, $244 billion to Oracle's market cap?
$244 billion, just boom.
Which pushed it up to $922 billion total.
Wow.
So, it's knocking on the door of that trillion-dollar valuation club.
Which is just incredibly rare air. Very few companies ever get there.
Exactly. Especially one that's been around for, what, nearly 50 years now?
Yeah.
And it really shows how fast market perception can change, right?
Mm-hmm.
When a company locks into a trend like AI.
Absolutely. It's transformative.
And just to underline your point, this isn't some small nibble disruptor we're talking about.
No.
Founded 77, like we said, employs, I think, around 162,000 people globally.
Massive operation.
They've been the backbone for enterprise data for decades. A true tech behemoth.
And yet they just made a move like a speedboat, as you say. Makes you wonder what they've been building quietly.
Which, leads us to the next part, maybe the most dramatic part, the personal impact.
Right. Larry Ellison.
This unbelievable stock jump. It directly translates into just a monumental gain for him.
Monumental is the word.
He added, get this, $100 billion to his net worth.
On Wednesday alone.
$100 billion. In one day.
Yeah.
It's hard to even process that number.
It really is. And if you look at the bigger picture, the billionaire rankings, well, according to some reports, like Bloomberg's tracking, that gain briefly made Ellison the world's richest person.
Wow. Ahead of Elon Musk.
Briefly, yes. Just for context, Musk was around $384 billion before this jump. Ellison started Tuesday around $294 billion.
So that $100 billion jump just vaulted him.
Exactly. It just underscores so powerfully how closely the fortunes of these tech leaders are tied to their company's stock, especially when AI is involved.
It's incredibly volatile, isn't it? Fortunes shifting by hundreds of billions almost overnight.
And it's not just about current profits. It's about the market betting on who will dominate the future, that future potential.
And Ellison himself, he's always been a fascinating character, hasn't he?
Oh, definitely.
Known for the jets, the yacht racing, America's Cup.
Right. But more recently, he seems to have developed this deep interest in molecular biology.
Yeah, I read that. Driven by personal reasons, apparently. Supporting research into aging.
Yeah, it seems so. It's quite a shift, or maybe an addition. Always looking at the next frontier, it seems. Data, speed, maybe even longevity.
Always pushing boundaries.
Well,
okay, so let's get to the why. What actually powered this incredible market reaction?
right, the core driver. And it really comes down to Oracle emerging as this, well, significant beneficiary of the whole AI boom.
Which maybe wasn't on everyone's radar to this extent.
Perhaps not. But it's happening specifically through their cloud infrastructure business, OCI.
OCI, Oracle Cloud Infrastructure.
Exactly. And you saw Bank of America analysts jump on this, calling Oracle a key AI enabler.
A key AI enabler. So they're providing the foundational tech.
Precisely. The high-performance computing that you absolutely need for cutting-edge AI development. They're not just, hosting websites. They're powering the really heavy-duty AI model training.
Gotcha. And you mentioned the catalyst. It wasn't just a decent quarter. Analysts use the phrase gobsmacking cloud demand numbers.
Gobsmacking, yes,
Yeah.
that was the word floating around. And when analysts start using language like that about a company like Oracle,
It means something extraordinary is happening.
it really does. So the specific number that caused this shock was the remaining performance obligations, the RPO.
RPO? Okay, remind us what that is exactly.
It's essentially their contracted backlog. So it's business they've already signed deals for, services they will deliver and get paid for in the future. Locked-in revenue, basically.
Okay, and that number was?
An astonishing $455 billion.
$455 billion.
Yep. And get this, that was up 359% from the previous year.
Wow. 359% year-over-year growth in contracted future business.
Exactly. And it just completely blew past what Wall Street was expecting, which was maybe around $180 billion.
So more than double the expectation, almost triple, really.
Yeah. Analysts were, I think the words used were blown away in shock.
You can see why.
It's not just a good quarter. It signals this fundamental, almost overwhelming demand for Oracle's AI cloud that nobody saw coming at this scale. These are long-term commitments.
So they're locking in customers for the long haul on AI infrastructure.
That seems to be the story the RPO tells.
And building on that, Oracle started making some pretty bold projections themselves.
Right. Oh, absolutely. They're not hiding their ambition. They're projecting cloud infrastructure revenue, just that piece, to hit $18 billion in fiscal 2026.
$18 billion, that's a big number on its own.
It is. But then look at the trajectory they laid out. They expect that annual number to jump to $32 billion,
Okay.
then $73 billion,
Whoa.
then $114 billion, and finally $144 billion in the subsequent 4 years.
$144 billion annually from cloud infrastructure.
That's the projection. It's it's an incredibly steep curve, exponential growth.
And that seems almost impossible for a company this size. How do they even justify numbers like that?
Well, it becomes plausible, I suppose, if you assume that the really big AI players, think OpenAI, think other large language model developers, continue spending massive amounts on cloud infrastructure, maybe even accelerate their spending.
So Oracle is betting that the AI infrastructure spend is just going to keep exploding globally.
And that they'll capture a very significant chunk of it. The key thing is that RPO number, it shows they're not just hoping for future sales, they are contracting huge amounts years in advance. It's a shift to these long-term partnerships.
Okay, so that explains the market excitement. But the big question then is, how are they competing? You've got Amazon AWS, Microsoft Azure, Google Cloud, these established giants.
The hyperscalers, yeah, formidable players.
How is Oracle carving out such a profitable niche here? What's their edge?
That's a great question, and it seems to come down to a few key things. One major factor, according to sources, is just this relentless focus on performance.
Performance meaning speed.
Speed efficiency, yes,
Yeah.
which translates directly into lower costs for customers running these huge AI jobs. Larry Ellison himself has basically said, look, if we're twice as fast for certain AI workloads,
Then you're half the cost.
effectively, yes. When training these massive models takes weeks or months and costs millions, any speed improvement saves serious money. Oracle seems architected for that.
So performance translates to cost efficiency for these specific intensive AI tasks.
Exactly. And then there's this other interesting angle. We could call it the disruptor advantage, which sounds weird for Oracle, right?
A 50-year-old disruptor.
Kind of. Because while Oracle, the company, is old, their OCI business, especially the part focused on GPUs and AI, that's relatively new.
Okay, so they built that part more recently.
Right. And that means they didn't have the same baggage as the older hyperscalers. Those guys built massive businesses on Cloud 1.0, mostly CPU-based computing for general tasks.
Right, virtual machines and storage, that kind of thing.
Exactly. Oracle, being a later entrant to the IaaS infrastructure as a service game, could go all in on GPUs and AI from the start, architecting specifically for it.
Without needing to support or transition a huge legacy CPU cloud business in the same way.
Potentially, yeah. And critically, they secured access to NVIDIA's GPUs. You need those GPUs for serious AI. That access is gold right now.
So being newer in this specific cloud segment allowed them to optimize for the cutting edge.
It seems like a key advantage. But you mentioned two other things earlier that sounded quite unique.
Ah, yes, the multi-cloud and the sovereign AI aspects.
Let's dig into those. What's the multi-cloud play?
So, Oracle positions OCI not just as another cloud, but as a platform that helps you use multiple clouds.
Okay, how does that work?
Their platform allows organizations to interconnect and manage workloads across Oracle Cloud, AWS, Azure, Google Cloud, more seamlessly than trying to stitch it together yourself.
Ah, so they're not trying to just steal customers. They're helping customers manage complexity across providers.
Exactly. It tackles that big enterprise concern about vendor lock-in. Companies want flexibility, maybe use the best service for a specific job from different clouds. Oracle facilitates that.
That's actually quite clever, playing nice with competitors in a way to offer a unique value.
It addresses a real need. And then the second unique point you raised.
The sovereign side. This one feels strategically massive. It's not just about selling to companies, it's about selling cloud infrastructure to entire countries.
Sovereign AI clouds. Explain that.
Okay, think about data residency laws, national security concerns. Many countries want their critical infrastructure, their sensitive data, their AI models, physically located within their borders, subject to their laws.
Right. They don't want it sitting in a data center in another country, potentially.
Precisely. Oracle has been very aggressive in building dedicated sovereign cloud regions for governments and related entities. An entire Oracle cloud setup within that nation's borders, sometimes even operated by their own citizens, adhering strictly to their regulations.
So it's like a self-contained national AI capability powered by Oracle tech.
That's the idea. It addresses those really deep geopolitical concerns around data control and digital sovereignty in the AI age. Very few providers can offer that level of national partnership and customization.
That feels like a huge differentiator, especially dealing with governments and regulated industries.
It's a major strategic advantage, I think. Gives them a foothold others might struggle to replicate.
Okay, so you put it all together, the performance focus, the kind of new architecture advantage in AI, the multi-cloud strategy, the sovereign cloud partnerships.
Yeah, well, it paints a compelling picture.
And clearly, the analysts are seeing it. You mentioned they called the results truly awesome, a momentous confirmation of the whole AI investment thesis.
They did, and the price target increases reflected that. Deutsche Bank going up to $335.
Yeah.
That's a big statement of belief.
Especially for Oracle. This is a huge vote of confidence.
No doubt.
But here's a twist, right? Amidst all this euphoria about the future, their actual results for the quarter just reported slightly missed expectations.
Yes, that's the fascinating part. The Q1 2026 numbers, revenue was $14.93 billion, EPS 1.47 cents, both just a little shy of forecasts.
Normally, you'd expect the stock to take a hit on that, wouldn't you? Even a slight miss.
Absolutely. In normal times, maybe. But this just shows how much the market is focused on the future right now, especially with AI.
The narrative trumped the numbers.
Completely. That $455 billion RPO number, signaling massive future contracted growth, just completely overshadowed the small quarterly miss. Investors looked at that backlog and said, okay, the future looks enormous. We'll forgive the slight miss right now.
It's all about the trajectory, the long-term contracts.
It really speaks to the power of that AI narrative and the tangible evidence of future business in those contracts. Projected growth and strategic position mattered more than immediate results this time.
So that RPO gives some comfort about sustainability because it's contracted. But what about new growth beyond that? Can they keep up this momentum?
That is the multi-billion, maybe trillion-dollar question, isn't it? That RPO provides a strong floor, predictable base.
Right.
But Oracle's not just relying on infrastructure. They're also planning to embed AI deeply into their own massive suite of business applications.
So using AI to boost their traditional software business too.
Exactly. Think AI agents helping with ERPs, CRM, HR software, making those tools smarter. So they see a virtuous cycle. The apps drive demand for the infrastructure, and the infrastructure enables better AI in the apps.
A flywheel effect?
Potentially, yes. Both sides of their business benefiting from the AI wave. It's a strategy to sustain growth, integrating AI across their portfolio.
Makes sense. But looking ahead, we saw those analyst price targets. Some were actually below where the stock was trading after the surge.
Yeah, that was interesting. The average target, I think, was around $254, while the stock shot up to like $328.
What does that gap tell you? Are analysts still playing catch-up, or are they seeing risks the market is ignoring?
It probably reflects a few things. One, just how fast the market moved. Analysts' models might not have updated that quickly. Two, genuine diversity of opinion. Some might be more cautious about those huge long-term growth projections. Can Oracle really hit $144 billion annually in cloud?
It's a massive number to achieve.
It is. So some caution is understandable. It signals a market that's potentially getting ahead of itself, driven by AI hype, or maybe the analysts are just lagging behind a fundamental shift. It highlights how hard it is to value these companies right now.
The market's pricing in a huge amount of future success, maybe more than traditional models can justify yet.
That seems to be the case. Potential is being valued incredibly highly.
So wrapping this up, quite a deep dive. We've seen Oracle, this established tech giant.
Almost seen as old guard by some.
Right. Leverage its unique position, its performance focus, its strategic moves in multi-cloud and sovereign AI.
To achieve this just historic market surge.
Fundamentally changing its own story, how Wall Street sees it, and dramatically boosting its founders' wealth, all tied to this just booming demand for AI infrastructure.
It's a powerful lesson that even giants can pivot and redefine themselves.
Absolutely. So as we leave this, here's something to think about. Considering Oracle's strategy, the multi-cloud approach, the sovereign AI push for nations, and this apparently insatiable global AI demand.
Yeah.
What does that signal about the power structures emerging in the next tech era? How might this influence which countries, which industries really benefit most from the AI revolution?
That's a big question. Who holds the keys to the AI kingdom, essentially?
Exactly. And maybe more personally for you listening, watching this unfold, where might you focus your own attention, maybe even your investments, as this AI future takes shape? Lots to consider there.
Definitely food for thought.